Good morning, good evening, good afternoon to wherever you are in the world. Welcome back to another coffee hour where we're going to be going over a lot of news. All right, we have some stuff in the lineup. We're going to be talking about Goldman Sachs buying Bitcoin, which their 13 was F in the lineup. We're going to be talking about Goldman Sachs buying Bitcoin, which their 13 was F in the. I forgot I had my feet up. All right, because I got to look out for the poll here. So I will cover the poll much later. Anyways, guys. Yeah, so we have a lot to cover, guys. Market's obviously down. Everything is down right now, right? The whole market is down. We got Bitcoin down, silver down, gold down, equities down, tech down, software down. Everything is going down. Commodities are going down. Mining companies are going down. The whole world is falling apart, right? But, you know, that is just the ebbs and flows of the stock market. So I think I'm going to start some of these streams going forward around 9 o'clock. It gives me kind of a chance to wake up, honestly, and like be a little more energetic. I actually changed out my coffee. I'm now drinking a straight espresso. All right, not espresso, but espresso. All right, for some of you guys out there. But yeah, I want to be a little more awake when I go through my news cycle. I started noticing it in my last couple of streams where I'm just like low energy. I got nothing going on, and it's hard for me to kind of go through the news cycle in an hour and then commit some of that to memory, right? So I want to start probably, you know, doing these streams a little later. Anyways, enough about me, my own personal stuff. Let's get into it, guys. Let's get into the news. All right. So real quick, I just want to check out who's in the chat. So we got Sergio. Hey, welcome back, man. Let's go early today. What a day of fun. Absolutely. 100% agree with you. I checked my portfolio today and I'm just like, you know what? I just put the phone back down. I was like, I'm going to leave it alone. I don't even want to check out. You know what? I'm starting off the day good. I don't want to be depressed. So I just left it alone. Let's see. All right. So do we have sound? I hope we have sound. Hopefully we have sound. Can you guys hear me? Let me get a mic check. All right. Let's see. We also had Victor Saint come in earlier and say hello. Well, hello to you too, sir. All right. We have the legendary skeptic in the chat, and we got, I think we got a new one. Yeah, I don't think I've ever seen your name. Maybe I have. But hey, welcome anyways. Everything is on sale. Absolutely everything's on sale. What's up? Well, what's up here? Ron from Maryland. Hey, happy to have you here, man. Thank you for joining. All right, we got Sean in the house. Hey, welcome. All right, let's see. All right, guys, let's get into it. All right, let's get into it. Boom, boom, boom. I got to move some things around. Let's see. Got to get it up here. All right, because I really want this to go good. Because I wanted to start off the show with this. All right, so here we go. Hopefully the YouTube gods don't get mad at me and flag me.
We're going to win so much, you may even get tired of winning. And you'll say, please, please, it's too much winning. We can't take it anymore. Mr. President, it's too much. And I'll say, no, it isn't. We have to keep winning. We have to win more. We're going to win more. We're going to win. We're going to win.
We're going to win more, people. We are winning. I hope you feel like we're winning. Absolutely. Right. Yes, Mr. President, I am definitely feeling it. Here is the Finviz heat map for today. All right. And of course, you know, I like to keep politics off the channel, especially when it comes to domestic politics, red, blue. I don't care who's in charge. I just want to make money. All right. But anyways, I thought that was funny. I saw that in my at the top of my feed. I was like, you know what? This is going to be perfect to open up the show with, because we're all getting cooked at this point. All right. So we can see here from the heat map, we're all, you know, a lot of the technology companies, technology sectors are just taking a massive hit, right? We have consumer defensive, which is actually doing really well, which is kind of alarming. You know, not alarming in the fact like sell everything, go, you know, flock to consumer defensive. But, you know, it's a sign. It's a signal. Investors are moving out of tech. They're moving out of everything related to technology into consumer defensive. Usually you see those types of moves right before a really, really big correction. I'm not saying that correction is going to happen tomorrow or Friday or Monday, right? But usually that's kind of what it means, right? It's a bellwether signal. You guys can do your own research on that, but that is what I've come to find out. Right. So we have consumer defensive, you know, discount store, beverage, et cetera, et cetera, et cetera. Right. So Walmart, again, $1 trillion company now, doing really, really well. We have industrials. All right. Also barely holding on. Again, all the major tech sold off, right? Semiconductors not doing so hot there, right? Technology not doing so hot. Consumer cyclical, things like Amazon, Tesla not doing well. Consumer electronics, Apple down. Software just going down. It's going to go down, trust me. Semiconductors also not doing so hot here, right? And this is the S&P 500 heat map. All right, for those of you who are not familiar with something like this, I have to find out what is going on X, because I realize it's like X is not showing any viewers. So I gotta look into that. Anyways. So we have skeptics saying y'all are getting cooked. What's this we business? Y'all are getting cooked. All right. I gotta take a brief intermission because I gotta find out if StreamYard is broken on X or something. Because for the last couple of streams, I noticed that like no one from X is joining, and maybe my streams suck. I have no idea. But it does seem like oh, that's why. That's why I see it. Okay. Real quick, I need to take this brief intermission and fix this, see if I can fix this stream on X. Oh, that's why. You are live. Let's edit this. Let's go here. Sorry, guys. I know we're trying to get to the news cycle, but I also have to make sure this is working. Boom. Let's get rid of that. Yeah. So that might explain it. Okay. There we go. That might explain it. All right. Hopefully we'll get some of the X crowd in on this stream. Okay. Let's move on, guys. So we have the S&P 500 down. All right. Just down almost a full percent and a half. Well, it is a 1.5%, right? That's a pretty big move to the downside. Again, anything when it comes to indexes, 1% up or down is a pretty big move. 2% is really big. So this is 1.5%. So there we go. S&P 500 not doing so well, but over the last 5 days, we are still up 24 basis points. All right. So we're just going to see how this ends up tomorrow. Tomorrow, we have some really big news, especially with inflation data. All right. So keep your eyes peeled for that. Definitely, what is it? I think the BLS comes out with their numbers by 8 o'clock. So we'll see probably either a pump up or a huge sell off if the numbers are bad. But I suspect honestly the number is going to come in good, right? The numbers are going to come in good, but that doesn't translate to we're good. Like that does not translate to the stock market doing well, at least in the near term. Because, again, if you have inflation coming down, jobs coming or job market doing well, what do you think the Fed is going, what's going through the minds of the Fed, right? Probably not going to get rate cuts. Anyways, I added this ETF to the lineup because I think it's expanded tech software ETF. And actually, at least for the 1 year, maybe the 2 year, you can actually line up Bitcoin with this, right? And the relation is risk on, right? This would be like a signal for risk on. Obviously, over the last 6 months, it has been risk off, right? And we can see here, down 23% in the last year, or excuse me, the last month. Over the last 5 days, it just keeps going down, right? Year to date, not doing so hot. But this had a pretty decent correlation with Bitcoin. So, some people, I'm seeing some, either pundits or channels, using IGV as kind of, an overlay to see where Bitcoin will go. Of course, it's not a 1-for-1, but usually when IGV starts to take off, that's usually when Bitcoin will as well. And when IGV starts to fall, that's also when Bitcoin will start to fall as well. So it was just a really interesting kind of idea. I've looked at it a couple charts, 1 year, 2 year, 3 year. It does, seem to support that. But again, over longer periods of time, I mean, I don't have the fancy tools, the charting tools to actually, line those up and show you guys. But anyways, just wanted to show that. This is a good signal. Obviously, the market is an obvious, risk off. Everyone's flocking to consumer defensive. Everyone's flocking away from technology software, and they're moving into other things. We see from the State Street sector tracker, everyone's moving to energy. All right. I keep covering this. I keep talking about this, but everyone's moving to energy, right? XLP, consumer staples, and then you have materials and utilities, right? And then over the month, again, you guys can see the numbers for yourself, right? Up 17%, right? Whereas infotech, consumer discretionary, financials, they're all going down. Okay. Money is rotating away from these sectors. So for gold, we had a pretty decent drop. All right, not a 10% drop, but a pretty decent drop. We dropped about 3.5% on gold. Silver was way worse. Silver absolutely got demolished today. 11%, 11.5% down on silver. Okay, it's just so much stuff coming out about silver. You have China doing a lot of funky things, and of course, you know, there's just not enough silver to go around. But again, the fundamentals for silver have not changed, but it definitely reached peak euphoria. I mean, it was crazy. Everybody was buying silver. Everyone was talking about silver. And just like, you know, history has taught us, whenever there's a really, really parabolic move, usually there's a correction that follows right after, down 35% from its all-time high. Okay. Or well, it's a recent high, I should say. Same thing for gold, but see there's a big difference between gold and silver. All right. And you guys just have to remember that silver is an industrial metal. Okay. Could be used as a store of value. Not really. I don't agree with that, but I've heard that sentiment be made, or that argument be made. Whereas gold is a store of value. Okay. But even gold is down. All right. So gold is down for sure. But again, if you're thinking about the debasement trade, et cetera, that is why you would, you know, have a gold position. And we're going to cover some debasement trade stuff. We're going to cover a new ETF that's coming out from Bitwise, of all places. We're going to cover that ETF in just a moment. All right. But I wanted to share that and my thoughts with you. All right. So again, the sector rotation continues to rotate. All right. We're rotating. All right. So like I mentioned, tomorrow, Friday, the 13th, very ominous, kind of scary. We could probably see a move down or a move up. Who knows, right? But we have CPI coming out. This is going to be the big one, guys. You know, this is the biggest. This right here, in my opinion, the initial jobless claims, CPI. These are the big, you know, signals for the broader economy. But we also have the ISM above 50, right? That came out earlier. So the ISM above 50, you know, just signals that the United States is in an expansionary territory. So that's good. That's bullish, at least for manufacturing. That's why the Dow, you know, i.e., you know, like something like an SCHD is doing so well. All right. So anyways, we'll cover that. We'll cover that. Well, if we have time at the end, we'll cover that. Anyways, let's move on. Hold on one second. Got to check something here real fast. Sorry if I keep interrupting the flow of this, but I gotta, yeah, see, this is still not updating. What is going on here? All right. Yeah, I'm gonna have to do something on X here, because X is not cooperating with me. You know what? Whatever. We'll just rock with it. Okay. So let's move on. So anyways, yes, CPI is coming tomorrow. This is what we're expecting. All right. So let's see. I forget what is it previous? Yeah. So the previous, and then the medium forecast. Okay. So where is February 12th? No, 13th, right? So it came in pretty hot, right? So we'll see what the reading is tomorrow. And that will, again, be a very big sign, right? Hopefully we're lower than 2.5. Hopefully we're at like 2.2, 2.3%. But, you know, again, I wouldn't hold breath. And it's because you're looking backwards, right? The data is coming from the past month. I've talked about this trueflation thing a couple of times on the stream. You know, I don't cover it every single day, but this is, you know, just another metric that Wall Street uses in order to gauge inflation. And you guys can see right here, inflation is down right under 1%. Now that's according to trueflation. You know, trueflation, and I'm parroting this. All right, this is not something I've actually researched, but trueflation uses a bunch of live data, like actual live data. It you know, pulls data from, you know, retail, from websites, from everything, right? Actual prices on things, so that, you know, jar of, I don't know, olives that you buy, it'll have that data, right? Whereas the BLS, you know, the BLS actually sends people out to these grocery stores to actually get the pricing, right? So that is really interesting. So anyways, going back to trueflation, we are showing 74 basis points, which is huge, right? So we'll see if the actual CPI numbers eventually catch up to something like this. Let's see if we could find the actual chart for this. Yeah. So you guys can see here is the actual chart. So it's just been going down, 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 right? Ever since December, it's just been going down. All right. So hopefully these numbers are very accurate because going forward, that is a big deal. I don't think we're going to be heading into an inflation story at the moment. But last year, we covered, Michael Sonnenfeld from Tiger 21, as well as Paul Tudor Jones. They were saying that this year, 2026, because of the big print that's coming, quantitative easing, lowering of interest rates, it's going to create an inflationary story, right? So right now, because the rates are still pretty decently high, we're not in QE. That's why it's showing that inflation is down, but eventually is going to turn into a gold and Bitcoin story, according to them, right? So we'll see how that turns out for interest rates, because we're getting into that segment. We kind of skipped this right here. Oh, what do you know? All right. Breaking news. U.S. signs trade deal with Taiwan. All right. We'll cover that probably another time. But anyways, January CPI inflation report is due out Friday morning. Here's what we're going to, or what's expected. The headline, or all item CPI, was at 2.7% in December and has been on a downward trajectory since peaking just above 3% in September. Excluding food and energy, core CPI stood at 2.6 in December. Both gauges are expected to show a 3 basis point monthly increase in January, or 30 basis points, I should say. It's also worth noting that the CPI has come in below the Wall Street consensus for the past 3 months. So that's really good, right? It's showing that inflation is coming down despite the tariffs, despite everything, monetary policy, the Trump administration and all the crap that they're doing, in terms of, tariffing the hell out of the entire world. But despite all of that, inflation is still coming down, right? So a light reading for January could give the Federal Reserve policymakers more confidence that they can lower their benchmark borrowing rate. However, if we check the CME FedWatch Group tool, you will notice that pretty much market participants are expecting no rate cuts, definitely for the next couple of meetings. Okay. So you have March and April, and probably after May, because after May, that's when Jerome Powell gets out of the seat. And, there should be a hearing or, a confirmation for Kevin Warsh. So if Kevin Warsh gets a fast confirmation into the seat, instead of it getting dragged on for a couple of weeks or a month, then we could potentially see rate cuts picking back up in June, July, et cetera, for the remainder of the year, right? So that's why we have these little, spikes right here. Okay. So, again, left to be seen. We got to wait. We got to wait for Jerome Powell to get kicked out. I'm not saying he's a bad guy or anything. All right. There's still a lot of stuff going on. You still have, him under investigation, et cetera, blah, blah, blah. Right. Getting inflation back to 2.5% would be consistent with prices prior to the COVID pandemic and around the average of 2017 to 2019, according to Tom Lee, head of research at Fundstrat Global Advisors. This is normal inflation conditions, even with tariff impact still lingering in these results. Lee said in a note, with the Fed funds rate currently targeted between 3.5 to 3.75, well above where it was pre-COVID, the Fed has a lot of room to cut, he added. All right, a dovish Fed is supportive of stocks, and this is why in our base case of a three-phase market, we see stocks exiting the year strongly. All right, so again, it'll be a volatile, bumpy road, but by the end of the year, we should still end higher. And I know it definitely doesn't feel that way because everything's getting sold off, as you guys already know. It seems like every other day it's something like this, right? Or we have, Bitcoin that's not doing what Bitcoin's supposed to be doing and going up, right? Price is not cooperating with the market, but that's okay, because if you don't have exposure to these assets and you want that exposure, these could potentially be those prices for you, right? Have we bottomed on Bitcoin? I personally don't think so. Again, I keep calling for about, $55,000, $58,000 range for Bitcoin. Can it drop lower? Probably. And that's not my price target, just so you guys know. That's just made up, right? It's Fugazi. Back of the napkin math. All right. Don't use my price target as anything factual or anything like that. If it doesn't reach and we end up bumping up higher, excellent, but for me personally, I think we're going to be in that range. All right. So we'll see. Again, Bitcoin just has not been climbing above that 70,000 mark. It's just been kind of hovering. And then, I think, again, over the next couple of weeks, we're probably going to be going lower. So anyways, going back to that, let's talk about Goldman Sachs making a pretty bold prediction for 4 rate cuts this year. So let's listen in.
Companies unveiling plans in recent days to fund the AI build-out. Alphabet's launching tech's first 100-year bond since 1997, while Oracle says it's planning to raise up to $50 billion in debt and equity this year. Joining us now to discuss all this is Goldman Sachs head of investment grade credit, Johnny Fine. Welcome. Perfect time to have you here. So how's the market absorbing all of these financing needs?
Well, the short answer is incredibly well. The Oracle financing priced last Monday, the debt component of it, that was a $25 billion debt financing that had the largest order book in our market in history. Clearly digested very well. I think the market viewed Oracle as having drawn a line in the sand with respect to its balance sheet and how it expects to fund for the remainder of the year. When we flip the clock forward to this week, we saw incredibly robust demand for Alphabet, both in the dollar market on Monday and then also in the sterling market on Tuesday, where they issued the largest sterling deal that had ever been done in the capital markets. And they issued a very large Swiss franc denominated bond deal as well. Also the largest non-domestic Swiss deal that was ever done in the market. It's been quite a run, and it's been like a real pleasure and an honor to represent these companies.
Who's buying all this debt?
Oh, it's an incredibly broad array of institutional investors around the world. I think on the Oracle deal, there was close to 3,000 line items in terms of investor participation. Obviously, the international markets don't have the same breadth or size as the US, but these are very robust, very broadly distributed securities to largely an institutional investor base.
Does the market draw a line in terms of who can do this, or how much, or what the balance sheet looks like?
There's all of these capital markets are open to the full range of investment grade borrowers. Obviously, when we think about some of the more specialty niches that some of these borrowers look to execute in, 100-year sterling is a market where there's a pretty narrow Venn diagram of issuers that investors are willing to buy and issuers who are willing to issue in that long a tenor. Obviously, Alphabet and many other long-standing, large-cap, very well-rated companies will continue to have access to that market. I'm not convinced there's going to be an enormous splurge of 100-year activity, but we've seen over time a lot of activity in 100-year dollars. This is the first, as mentioned, tech deal in 100-year sterling. I think it's a lot of fun. It's a super interesting market, and obviously a little niche, but getting $1 billion sterling done in 100 years was quite a transaction.
The capital needs of some of these companies are seemingly endless. Many of them generate, or at least used to generate, a lot of free cash flow, not as much anymore, if that at all. But I just wonder, given what a good time it would seem to be to borrow, do you encourage them to get back into the market sooner than they otherwise would?
Well, they'll plan over the course of the year, as anyone would, and they'll look at various different levers that they have to be able to fund this CapEx. You're right. These CapEx announcements continue to grow, and they continue to change and be revised upwards. Just in the last 2 weeks of earnings announcements, we saw CapEx announcements go up versus previous estimates by between $120 and $150 billion. Some will rethink about how they're allocating capital, whether it be reducing M&A or reducing share repurchase. Others will have plenty free cash flow. Others still will find a need to be able to go to the debt capital markets, and they'll look to do that in a way where they can support their credit ratings and existing leverage. And so, of course, credit conditions right now are very affable. They're affable in the US. We're close to the 1997 lows in terms of credit spreads. That's also true in the international capital markets as well.
Right.
It's clearly a great environment, although I'm not expecting a huge amount of disruption to credit costs as we think about evolving over the course of this year.
And nobody seems concerned. I mean, these are obviously incredibly profitable companies, many of them we're talking about, but they are going to negative free cash flow. I mean, it's something I think few of us would have anticipated seeing, certainly in 2026. No concern in the bond market about that?
No, because the expectation, it's really a short-term build of an extraordinary amount of infrastructure. It's obviously clearly the largest infrastructure build in human history. And there will be some companies who will go into deficit in the short term as they pay for that build, with the payoff in subsequent years, whether that 2, 3, 5 years forward, looks to really pay down that leverage and get into a much more robust free cash flow position.
Meantime, overall, you remain quite dovish on rates in general, yes? You think the 10-year maybe goes into the threes?
Yeah, I still think that we can see 3.5% in the 10-year later on in the year. I think it's a combination of two factors. One, I agree with what David Heinen was saying yesterday. I think there'll be 4 cuts over the course of this year. They'll be back-end loaded. My view is that the first cut will be in June. That's obviously not in line with Jan Hatzius and his team. I'm more dovish than they are. And that's simply because I think that with Warsh coming in as Fed chair, I believe that the Fed will move to a more anticipatory stance when it comes to making monetary policy decisions.
All right. So unfortunately, they did not front load the Fed rate cut information until the very end. So I apologize for that. This is the first time I'm watching this video. But yes, so again, Goldman Sachs still anticipates about 4 rate cuts this year towards the back half, all right, second half of 2026. All right. And again, I mean, if you look at the CME Fed Watch tool, I mean, that's kind of what market participants are kind of voting for as well, right? At least until December. We'll see these numbers obviously change as time goes on and as we get closer to these dates. All right. So the next big date, in my opinion, is going to be 17 June 2026. All right. Because that's when Powell will be out of the seat. And then hopefully Kevin Warsh will be in the seat. Hopefully, again, there won't be too much, what Congress does, right? Just dragging things out. Hopefully it won't drag that out a couple of months. All right. So that is that for inflation CPI data, potential CPI data for tomorrow, and for potential rate cuts. Let's move on to this new ETF. Let's move on to this new ETF that just dropped. All right, just launched. It hit the radar not too long ago. This is from Bitwise, and I think this is really kind of cool. But this is Bitwise launching BPRO, which I guess it means be proactive. The Bitwise Proficio Currency Debasement ETF. All right, combining exposure to Bitcoin, gold, miners, and precious metals, actively managed with the expertise of Proficio Capital Partners. All right, so this will be a very, very big thing. Let's see. So Sean says, you must be a MAGA. Well, Sean, first foremost, I keep politics off this channel. I don't root for one team or the other. I could care less. I'm honestly just trying to make a buck. But I cover the news for what's going on because it does impact the stock market. It does impact our holdings, right? It does impact everything we do with investing. So that is why I cover political news, but I don't get into the nitty gritty of it, especially when it comes to domestic politics, because again, that turns into a red versus blue. You're wrong, I'm wrong, we're all wrong, etc. So I honestly don't engage in that type of stuff. Me personally, again, I could care less. I'm trying to make a buck here in the stock market. So yeah, so there we go. Okay, so anyways, BPRO. This is the Bitwise Proficio Currency Debasement ETF. I've been talking about the debasement trade for a very long time. Well, not a very long time, but at least for this year I have. And that's why I have such a huge allocation to gold, right, in my portfolio. Just for a quick refresher, in case you guys aren't familiar with the debasement trade, just a quick refresher. All right, the debasement trade is an investment strategy where investors shift money out of fiat currencies like the US dollar and into assets perceived as stores of value, such as gold, Bitcoin, real estate. You could throw in energy infrastructure, things that actually generate money, right? Due to fears that government debt, money printing, and inflation will reduce the purchasing power of traditional money. Okay, so that is what the debasement trade is. All right, but BPRO follows an actively managed investment strategy targeting assets poised to benefit from the declining purchasing power of fiat currencies, all right, USD, just to name it, right, including Bitcoin, gold, silver, precious metals, and mining equities. The fund will adjust exposures as the market conditions change, which I think is really cool. So, if you have like mining stocks that have probably ripped to the high side, they'll probably start trimming that, all done within the ETF and then reallocating it, right? So I don't know. I did not find it in time how often they plan to rebalance this portfolio. They do have a pretty high expense ratio. The expense ratio is about 98 basis points, so close to a full percent. But again, I think that strategy is pretty cool. There's a few other ETFs that have kind of that similar strategy where they'll just rotate. You have some of the staked or stacked ETFs out there from quantify funds, like Bitcoin and gold, or the S&P 500 and gold, or the S&P 500 and Bitcoin. So they're like, those do exist already. But I do like this one. And I find it interesting because it's coming out of Bitwise. Bitwise, if you guys don't know, they have a ton of ETFs for crypto, right? They also have that legendary IMST ETF, you know, for MSTR, doing cover calls, you know, that type of stuff, similar to like a msty, you know. So that was all around YouTube for a while. But anyways, so again, I think this is really like, it is really a cool fund. I don't think I'll be opening a position, obviously, because I already have my exposure through different ETFs. I have my, you know, mining stocks, etc. Bitcoin with IBIT, and I have, you know, my broad market indexes. So I really don't think I'll be opening this, but this could be, you know, something for someone who doesn't want to have, you know, actively manage all their positions. But anyways, for decades, investors have relied on a simple mix of stocks and bonds to protect their wealth, but that traditional playbook is struggling in an era of rapid monetary expansion, said Matt Hoogan, Chief Investment Officer at Bitwise. By combining the historical scarcity of gold with modern digital scarcity of Bitcoin, BPRO offers a powerful new way to hedge against the persistent decline of fiat currencies. We believe this hard asset approach is the missing piece of the modern portfolio. Hard asset, digital scarcity, you know, really it's sound money. That's basically what Bitcoin maxis and what gold bugs are shooting for, right? Obviously there's, you know, a fight in that space of which money is real and which isn't, you know, but again, both the ideology for both is that they're looking for sound money. Over the past 2 decades, the US dollar has lost roughly 40% of its purchasing power, if not more. With the national debt climbing to $7.5 trillion to $38 trillion, in a recent Bitwise VetFi survey, the financial advisor cited fiat debasement as one of the most important themes to watch for in 2026, with 22% of advisors citing that as a critical area of focus. All right, BPRO provides that strategic response to these well-rounded or well-founded concerns. All right, so again, the debasement trade, I think, is a real thing. Me personally, I'm taking advantage of that by having something like a huge gold position, something like a huge Bitcoin position. And I'm also looking at, of course, the metal mining companies. Personally, again, something like something like a GDX, right? Very simple. Something like a SIL for silver, GDX for gold, right? Those could be potential positions in people's portfolios if they want to invest in these miners. Or you can have spot price, right? You can have the spot price silver. I hate to show this chart, but you could have the spot price silver if you wanted, right, in your portfolio, or gold, right? You don't have to make it complicated. But you know, these are options that are available to you. Despite the stellar performance of gold remains a ghost in most modern portfolios, according to Goldman Sachs, gold ETFs account for just 0.17% of private financial holdings, meaning the asset is still remarkably underowned. And you heard Ray Dalio at Davos saying that people should allocate between 5 and 15% to gold in their portfolios. That is a huge number. Me personally, I'm at about 9 and 10%. So I'm happy with that. I may even add more as time goes on, but for right now, gold is more or less just a hedge against the debasement. If I have to sell out of it, then something really bad has happened. Anyways, BPRO represents the evolution of our wealth preservation mission, shifting between precious metals, digital stores of value to help reduce, where did I leave off? Precious metals and digital stores of value to help provide a flexible shield as the purchasing power of global currencies continue to erode. And of course, there was some news that just came out, and I'm probably not going to cover it in this stream, but you have Russia, because it gets into like more geopolitics stuff, but you have Russia and the United States potentially striking a deal, right? This isn't official. This is just a memo, but there is a potential for Russia to get back on the system, right? Get back on the USD. And there was a note from the Kobesi letter basically saying that Russia would start settling in USD, which would be a major shock to the BRICS nations, because BRICS, Brazil, Russia, India, China, and you have Saudi Arabia and a bunch of other countries, they're moving away from USD, right? This is a bigger picture, US dollar dominance. So if the US was to basically broker some type of deal to bring Russia into the mix and make them settle in USD, this wouldn't be bullish, dollar. Don't get me wrong. This is not bullish dollar. But this would be, good for USD dominance, right? Because there's a current geopolitical fight right now going on in the broader world between the United States and China, right? That's just what it is. And you can see it. There's all this financial warfare happening at a bigger level, right? Anyways, the fund seeks capital appreciation, which we want. All right. I don't think this is going to be a cover call fund, a high income fund. Absolutely not at all. Right. And this is how they're going to do the balancing, which I think is really interesting. They're going to keep 25% in gold at any point. So any point in time, doesn't matter if gold is doing really well or gold is doing really bad or other assets are all over the place. They're always going to have a 25% allocation in gold. And I think that's really, really interesting. All right, strategically allocate across other assets such as silver, platinum, palladium, and other related equities along with Bitcoin. You guys have heard on this channel several times, especially in the chat, people talking about silver, platinum, palladium, right? And now copper. I'm surprised they didn't include copper in this, but I would not be surprised if in the future they probably start including copper. Okay, so just some background information, about the fund Proficio. Matthew Wask, Bob Haber, Proficio is about a $5 billion investment advisory firm that has spent the last 12 years refining the currency debasement strategy on which BPRO is based. All right, the Bitwise Proficio currency debasement ETF is now trading on the New York Stock Exchange under the ticker BPRO. All right, it has a total expense ratio of 96 basis points. So really, really cool. I think this is really good, for those of you who are interested in, something like a product that has everything. That has, you don't have to go out and choose individual stocks, individual ETFs, like IBIT, SIL, GDX, have some GLD in your portfolio. You don't have to do any of that, right? Because again, you're stacking on not only weighting risk, right? You have to figure out which ones you want, how much, but you're also stacking on expense ratio, right? You're adding on an expense ratio. Whereas with this, it's just all in one. It's an all-in-one product. So again, this could be a very interesting product. Me personally, I like to have a little more control over my investments, so I like to dollar cost average, certain assets. So like if it's Bitcoin, like we're seeing right now where Bitcoin is dropping, that is, gives me an opportunity to allocate directly to Bitcoin. So this product is going to be for those people who just don't want to deal with any of that. They want a more passive approach versus an active approach. So all right. So moving on, we have from Walter Bloomberg. This was huge. All right. Energy enters rotational bull market as we have shown in the past. All right. We've shown this rotation to energy is a big deal. That is the story right now. All right. Bank of America says the energy sector is in rotational bull market driven by a shift away from large cap tech. The XLE ETF outperformed the S&P 500 by 13% in January. All right. Analyst Calais Akamine notes that the market remains uneven. Global oil is oversupplied by 2.5 million. OPEC Plus is pausing cuts, and recent Brent gains are largely short-term Iran-related moves. There's a whole carrier strike group right in that area. Potentially something to happen, right? Potentially something to happen. Will it affect the broader stock market? No. Will it affect commodities? Probably so. Okay, because again, that strait over there, you have a lot of oil producing countries, Kuwait, Saudi Arabia, Qatar. They're all exporting through that Strait of Hormuz. And if Iran was to try to take control or contest that area, it could get pretty spicy for the oil markets. All right. BOFA sees limited upside for large cap energy names as valuations are tied to cash yields, not revenue growth. Mid cap companies like DVN, CTRA, OVV, and CRC offer more attractive opportunities. We have covered on this channel how energy, you can look at something like ExxonMobil, ticker XOM, has just been climbing higher, right? If you look at, a long-term XLE chart, it almost looks like this is going to be the breakout for energy, right? Because of the pent-up demand for energy as we continue moving on with this AI thesis, AI data center demand. And then not only that, you dig deeper, you're going to have basically infighting between, or not infight, I shouldn't say that. You're going to have a challenge. The Trump administration and state, local state governments are going to have a challenge where do they feed the data centers or do they feed the American people, right? For power. Because as these data centers consume power, the cost of energy is going to go up, right? For the American consumer, right? For the American household. So now it's a balancing act. And that's kind of what state or what the energy sector is kind of been pumping on, is because there's going to be all this demand for natural gas, for oil, coal. We saw a chart not too long ago. Windmills, definitely not. Solar energy, not as in high demand, but at least those three commodities are definitely coal, natural gas, and I just blanked. Coal, natural gas. What's the other one? Coal, natural. Anyways, let me move on. Help me out, chat. What is it? Oil. There we go. Oil, natural gas, and coal. Thank you. Holy heck. Okay. So moving on. So Goldman Sachs revealed $2.3 billion crypto investments, including Bitcoin and XRP. All right. This was a latest filing, a 13F filing. Goldman Sachs disclosed significant crypto exposure in its Q4 2025 13F filing, revealing more than $2.36 billion in digital asset holdings. I know this is pink. Hopefully I could change this right here. Boom. There we go. The filing shows $1.1 billion in Bitcoin, $1 billion in Ethereum, and 153 million in XRP, and 108 million in Solana. Right. So these are the four big coins, representing a 0.33% allocation of its reported investment portfolio. Right. So they're not taking a huge stake, but it is a big deal because it's Goldman Sachs. Right. Because Goldman Sachs has not been, has not had a very favorable view of crypto anything. So by them having just a small sliver, a small stake in these coins, should tell you something, right? The disclosure places Goldman among the most exposed major U.S. bank to crypto-linked assets, albeit still at a small percentage. All right, so they actually have these as part of their investment portfolio. This is not like an ETF that they have and then they just make money on the AUM, right? Something like an IBIT or an FBTC from Fidelity. A closer look at the filing shows Goldman's XRP exposure comes specifically through XRP exchange traded funds with holdings valued at approximately 152 million. All right. So again, this is just more about Goldman Sachs, stance on Bitcoin or crypto in the past couple of years. Historically, Goldman's public stance on Bitcoin was skeptical. Really, they didn't like it. Before 2020, executives and research teams described Bitcoin as a speculative asset with limited use as money and no intrinsic cash flows. The firm consistently framed crypto as unsuitable for conservative portfolios, emphasized volatility and regulatory risk. That position began to soften after 2020. As institutional demand increased, Goldman restarted his crypto trading desk, expanded derivative access, and produced research acknowledging Bitcoin's role as a potential inflation hedge while still stopping short of endorsing it as a core asset class. All right, following the crypto winter of 2022, the firm again stressed infrastructure and counterparty risk. More recently, Goldman has shifted toward cautious participation, i.e., the 33 basis point allocation or weighting. It has engaged through ETFs, structured products, and tokenization initiatives while maintaining that crypto remains speculative. Just as a note, if I'm not mistaken, and I believe we covered this, Goldman Sachs is launching a Bitcoin ETF. Let's see the news. Nope, that's not it. Hold on. Nope, that's covering the latest. So they're holding 1 billion in spot price ETFs. Okay, so I can't find that news right now, but yeah, Goldman Sachs was they wanted to create their own IBIT version, their own ETF that was spot price for Bitcoin. But I don't think they were launching it in the United States. I think they were launching it overseas, probably for the European markets. So again, adoption, right? That's a signal. Again, all these banks all of a sudden coming out with their Bitcoin holdings and saying, oh yeah, we actually do have some, which is, in my opinion, bullish for Bitcoin, right? So all that fear, doom, and gloom out there, Bitcoin going to zero, Bitcoin this, Bitcoin that. I mean, why are all these institutions buying this stuff if it's going to go to zero? They must know something we don't. All right. So again, that's just my thoughts. Coinbase missed Q4 estimates as transaction revenue falls below $1 billion. All right, real quick, I want to check the chat because I did not get into it, or I haven't checked the chat in a bit. So give me a second here. Let's see. Boom. So Sean says lower interest rates, higher inflation is not good. I agree. I mean, I think all of us would agree with that. But that's what's going to happen. And the reason why I think that is because, the Trump administration wants to run the economy pretty hot. They want a weaker dollar because it's going to make American goods all cheaper for foreign foreign companies to buy. And we actually had the Working Investor, another YouTube on this channel, and he was talking about the international trade, right, and international ETFs. He brought up a lot of good points, right? You can look at some of those old ETFs, or excuse me, those international ETFs, and they're doing extremely well. Now, me personally, I'm still not a believer in international stocks ETFs. Even though, there's some good points to it, to have that exposure. I just personally still won't do it. But there is a good point to be had that you should have exposure in a portfolio, especially if you're worried about, the U.S. stock market underperforming over the next couple of years, because the S&P 500 has actually underperformed relative to some of these other international funds or international stock markets. Give me a second here. Donald Trump, what is it? Weaker dollar. I don't know what to say. Let's see. Yeah. There it goes. Yeah. So that's the reason why Donald Trump wants a weaker dollar, or the Trump administration wants a weaker dollar. Let's see. I appreciate that. So Farouk says, that's why I follow this channel. No politics. Thanks, Eugene. I appreciate it, man. I really do. Because I see it all day in the news, right? I see it all day in my IG feed. I see it in messages to me, right? This, that, the other, blue, red, woke, MAGA, blah, 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 blah. At the end of the day, there's bigger things to worry about. In my opinion, there's bigger things for me personally. There's bigger things to worry about. So I just don't get sucked into that nonsense. I have my own beliefs, and I'm going to keep those beliefs to myself. And that's that. If you ask me a question, on certain subjects, I'll answer it. But when it comes to like geopolitics, I'm pretty transparent about that, because again, I'm an America first type of person. I want America to succeed, right? Obviously being an American citizen, I don't care who's at the helm. I don't care what administration's in charge. It could be blue, red, Democrat, Republican, independent, Green Party. I really could care less. I just want America to be successful. And I think any American should want America to be successful. But anyways, let me get off that topic. Let's see. Boom, boom, boom. Let's see. So right here, this is a good question. So Padre asked, how much gold have you purchased compared to your Bitcoin purchases? I would say it's almost half. So gold almost represents half of my Bitcoin holdings. And honestly, I still am kind of thinking about, increasing my gold position, because I like that idea that you had proposed the other day of having a 1-for-1. But hey, man, your man's only got so much money. All right. So I'm not a multi-millionaire. Let's see. Boom, boom, boom. Okay. All right. Let's get back into it. So we're going to go into earnings, guys. So there's a couple earning reports that I definitely wanted to cover, not because I follow the stocks, but again, I just think it's important for kind of the broader story, right? The broader story for this, in this point, is crypto. But over the next couple of earnings reports, we're going to go over Arista Networks, we're going to go over Applied Materials, and we're going to go over Nebius. Okay. So anyways, Coinbase missed Q4 estimates as transaction revenue falls below $1 billion. If you followed the Robinhood earnings, you would know that Coinbase is also going to miss, right? A lot of money dried up after 10/10, October 10th, massive liquidations across crypto. $1 trillion in liquidations happened. I think it was like, 2 million or something traders that were affected by this. A lot of market makers did not come back, right? Market makers, they lost a ton of money and they never came back. So Coinbase obviously was affected or impacted by this. And again, liquidity has not returned to the market. So that is why, right? Crypto cyclical, and experience tells us it's never good or as bad as it seems, said the company. I didn't really go through this whole thing, but I just wanted to bring up that point. But you guys can certainly bring it up if you're a follower of Coinbase. I know, there's a lot of high yield coin based ETFs out there. So if you're asking the question, why is Coinbase going down? Well, this is the answer right here. Okay. This is the answer of why Coinbase is going down. It's just money is not returning to crypto, right? As a matter of fact, if you, again, we can go back to this. This gives you the intelligence, right? This gives you the behind the scenes of where money is flocking to, and you guys see it right here. It's going to energy and consumer staples. Walmart is doing really, really well. Let's just bring it up for kicks and giggles. Let's see, Walmart stock. Is it Walmart's? No, it's Walmart. There we go. Look at that. Look at that chart. Okay. Look at that chart. It's doing pretty damn well. I mean, look at that. You know where the money is going. It's going to these very safer defensive plays, right? Versus, gold, silver as well. They had their corrections already. They had their pullbacks. Will they continue to run higher? Again, you have to think about the fundamentals when you're, considering these metals, right? How much in demand are these metals? I talked about it in previous streams about copper, about silver, and some of these other ones like UAMI, as we mentioned in the chat. UAMI is United States antimony or something like that. But yes, antimony is also a very big deal because, again, you need metals for not just technology, not just to power artificial intelligence, right? All the circuitry, all the wiring, all the copper wiring, all the Ethernet, all the fiber optic, but you also need it for national defense, missiles, bullets, okay? Innovation in robotics, drone warfare. You need silver, you need metal for all of that stuff. Okay, so again, when people are freaking out why silver is going down, I think they're not keeping in the back of their mind the fundamentals, and they probably bought in on hype, to be perfectly honest. Okay, that's just the way it is. Anyways, moving on, we have applied materials. All right, applied materials. All right, supplies equipment used to manufacture semiconductor chips. All right, so obviously very important. They have tools. Their tool set covers deposition, etching, metrology, and inspection. All right, I don't even know what any of this means. I've never really dug deep into applied materials. Critical supplier to foundries like TSMC, Samsung, and Intel, benefits directly from increases in chip fabrication and advanced nodes. Also serves display materials engineering markets. Okay, so applied materials, pretty important. They beat on earnings. They did really, really well. Okay. Applied Materials delivered strong results in our fiscal first quarter, fueled by the acceleration of industry investments in AI computing, said Gary Dickerson, president and CEO. The need for higher performance and more energy efficient chips, which AMD is, in my opinion, ahead of the curve over NVIDIA. But higher energy efficient chips is driving high growth rates for leading edge logic, high bandwidth memory, and advanced packaging. These are areas where Applied Materials is in the process, or is the process equipment leader. And we expect to grow our semiconductor equipment business over 20% this calendar year. Looking ahead to the fiscal second quarter, Applied Material expects revenue to be between $7.15 billion and $8.15 billion, well above the $7 billion analysts are expecting. All right. So again, another name for you guys. If you want to check them out, AMAT is the name. All right. So moving on from that, we have Arista Networks. Okay, what's going on with my mouse here? Boom, there we go. All right, Arista Networks. I've seen the name probably a handful of times. Never really looked into them, so I figure, hey, why not? I see that they had earnings, so let's take a look. But for those who are uninitiated, including myself, Arista Networks builds high-performance cloud and data center networking equipment. Okay, so probably like a Cisco, right? A Cisco equivalent. Major products include Ethernet switches, routers, network software, known for ultra-low latency and high reliability for AI and hyperscale workloads. Core software platform is their EOS, their extensible operating system. So, Cisco, they have their iOS or their Cisco-based operating system. Customers include large cloud providers, AI clusters, and enterprises. So that's Arista Networks. So their shares had increased more than 10% during early market trading on Thursday after reporting its fourth quarter 2025 financial results that demonstrated a 29% year-over-year revenue gain. All right, revenue for the quarter totaled $2.4 billion, which was more than the 2.39 estimate. For the entirety of 2025, Arista Networks revenue increased 28.6% year-over-year to a total of $9 billion. 2025 was the year of validation for our Arista 2.0 momentum as we hit the milestone of shipping a cumulative of 150 million ports. All right, so when they're talking about ports, they're talking about like switches. If you guys don't know what a switch is, let me just bring that up because I think, or switches and routers, because I know we have some not so tech savvy people in the audience. So let me see if I can bring that up. Let's see. Okay, well, I can't because my keyboard is broken. Okay, there we go. Networking switch. So you guys will know, like if you have a Wi-Fi router, right? When they're talking about ports, they're talking about where the Ethernet goes, right? So they're talking about something like this right here. Oop, there we go. They're talking about something like this right here, right? These switches. So they're talking about how many ports that they had shipped. Oops, that's Anthropic. There we go. Okay. So again, very good for Arista. We exceeded both our AI networking and campus expansion goals, delivering profitable growth and revenue of $9 billion. For the quarter in progress, that's the current quarter, Arista expects revenue of $2.6 billion, which is more than the $2.4 billion estimate. All right. So again, bullish for Arista. Arista seems to be in a very good spot. Again, they're still getting sold off just like everybody else, right? Just like all the other technology stocks, they're not really doing much as well. So again, everyone's just selling tech. Everyone's just selling technology companies. All right. So we also have, all right. So we have retire on dividends in the chat. No more red, please. Man, you missed. I don't know if you were here at the beginning. I'll probably get in trouble for this by the YouTube gods, but
so much you may even get tired of winning and you'll say, please.
No more winning. I'm tired of winning, guys. All right. We have, let's see. So the Nebius is another one. And Nebius actually is interesting. I think I should have chose Nebius over CoreWeave because, we've talked previously, last year when NVIDIA, AMD, and a couple other players were out in the Middle East. And then, NVIDIA continued their tour to Europe. And then this whole idea of sovereign AI started to come about, right? So what is sovereign AI, right? You know that most of the large language models are built in the United States. You have Anthropic, you have OpenAI, right? You have Gemini, you have Claude, Claude is Anthropic, but you have, Microsoft's Copilot. You have all these AI models being built in the United States, right? Europe wants to develop their own. That is not anything to do with the United States. Same thing for China. China has DeepSeek, right? And they also have a couple other language learning models that I don't know their names off the top of my head, but you also have Europe that wants their own AI, right? Their own AI for their own use that is not reliant on the United States, United States' companies, right? So that's the idea behind, sovereign AI. Nebius is the provider for basically Europe, right? They're the ones that are powering the AI infrastructure, the data center build out. So that's essentially who Nebius is. So real quick, Nebius is AI focused cloud and infrastructure provider. So they're not doing any mining like some of these other companies that pivoted, from either Ethereum mining or Bitcoin mining. This is a pure play data center cloud infrastructure provider. All right. Offers GPU compute capacity for training and inferences, positioned as a European alternative to US hyperscalers. Okay. Provides data, tooling, and platforms for AI developers, competes in a fast growing sovereign AI infrastructure space. All right. The Dutch AI infrastructure provider saw revenue for the fourth quarter ending December 31st surge 547% year over year to $227 million. However, the numbers came in below the consensus estimate of $242 million. All right. Adjusted net loss widened to a negative $173 million compared to the negative $69 million a year ago. The company noted that it ended the year with about 170 megawatts of active power versus its target of 100. All right. So that's good. That means more people are using it, are using their data center. We enter 2026 with strong momentum, high operational confidence, and a scalable platform built for the world's most demanding AI workloads. We are on track to end the year with APR1 of $7 billion to $9 billion. To achieve this, we will focus on 4 key strategic areas: scaling capacity with discipline, executing on our customer commitments, advancing our AI cloud platform, and raising capital strategically, said founder and CEO Arkady Veloz in a letter to shareholders. Veloz noted that in the fourth quarter of 2025, capital expenditures were about $2.1 billion, mainly driven by the purchase of GPU and GPU related hardware. Again, the NVIDIAs, the AMDs, probably the super micros out there, the SMCIs, maybe even they're purchasing stuff from Arista, or Cisco. So yeah, the company noted that it remains on track to reach 800 megawatts to 1 gigawatt of connected power by the end of 2026. The company now expects to have more than 3 gigawatts of contracted power by year end. Nebius is planning a new 240 megawatt data center in Bethune, France, that will be one of Europe's largest when it's finished. I don't even know if I pronounced that correctly. All right, France. Last month, Nebius and its competitors Supermicro and CoreWeave said that they will start offering NVIDIA's new Vera Rubin, the NVLink 72 computing platform. All right, so that is for Nebius. Again, we just covered 3 different companies that are involved, and they're all showing and they're all saying the same thing. AI demand is growing. Okay, so even though the stock prices and the news out there, the sentiment is still negative, still very bearish, as we can obviously see here with FinViz. You know, all of these technology companies just getting slaughtered doesn't mean it's going away and the demand isn't going away. Okay, so again, it is in my view that later we'll have what happened earlier, you know, last year, where we had this really bad sell-off, a lot of negative news. NVIDIA's cooked, DeepSeek came out, the AI language learning models are all trash. You know, China won the game, all the stocks sold off, and then we hit, you know, Liberation Day, you know, stocks would continue to go down, and then it was just a complete rip to the upside. Again, when will that play out this year? Nobody has a crystal ball. Nobody really knows, but I think we're going to see something similar happen this year, where we're going to be down, we're going to be trailing down, it's going to be a grind down, and then we will pop and then go further up. What that catalyst looks like, it'll probably be a mix of interest rates, to be honest, and announcements of QE, quantitative easing. Because as quantitative easing happens, as interest rates come down, these technology companies, it's going to be easier for them to get money, right? The debt markets become cheaper, right? So that is, they won't have to issue more shares or anything like that. They can just take loans and then, you know, continue on with their merry way, building out data centers, going into debt, and then continuing to improve their language learning models, especially for the semiconductor companies, right? They will be flush with cash because all these companies, we saw that Microsoft, Google, and Amazon are putting together. It's Microsoft, it's Meta, Microsoft, Meta, or is it? I don't know. It's one of these combinations: Meta, Google, Amazon, Microsoft. It's one of those combinations. They're putting $600 billion towards data center capex. Okay, so who do you think are going to be the beneficiaries of that $600 billion? Right, that is the $1 million question. All right, so real quick, I just want to check on this. This is going to be just because I hold Palantir, but this is really nothing too big of news. But you know, Palantir is in focus. Receives DISA authorization. If you guys don't know who DISA is, it is the Defense Information Security Agency, I think. Oh, systems agency. Yeah. So DISA. So, in government contract work or just in federal IT work, you deal a lot with DISA. DISA creates basically the standard for government networks. So anyways, Palantir was in focus Thursday as a tech giant said it had received a notable authorization from the U.S. government. All right. And investor Michael Burry weighed in on the stock. All right. The Denver-based company said it had received authorization from DISA to extend Palantir federal cloud services forward level 5 and impact level 6 provisional authorization. So what does all this really mean? It means that the government will be able to have on-premise Palantir, right? They will have on-premise Palantir and for their edge networks. What does all that really mean, right? Well, if you draw a circle, right? Everything in the circle is government networks. You'll be able to have Palantir actually being used, right? Actually being used within government networks, and then on the edge, anything touching the internet. So that is a huge deal because this is going to provide so like the government, they really rely on a lot of these analytic tools in order to, respond to threats or deal with hardening the network, as it were. If they're going to be using Palantir, Palantir could just be installed within the network and then used on, identifying these threats, identifying these weaknesses or these vulnerabilities. So it's a really big, it's all AI integrated, right? Palantir's AI. So this in my opinion is a pretty damn big deal, especially since, a lot of it is done manually by hand. You have network architects, you have systems architects all dealing with, the government network, whereas Palantir will be able to just go through stuff, rip through it, and then say, here's all the problems, right? Instead of spending months and months and months of planning. So again, bullish for Palantir, but Michael Burry did weigh in. Michael Burry has been pretty bearish on the stock, and he actually published something on his Substack. I don't have a thing to his Substack, to be honest. I don't pay for his Substack, but we can cover it real quick. All right. So Palantir's new close, Foundry, AIP, and the failure of reason. And this was obviously made by Michael Burry. Okay. We're just going to read the top because I think it's kind of interesting. You think it is helpful having a fluorescent green praying mantis coming into their offices, telling them about German philosophy? Do you think that's helpful? I can tell you it's not helpful. All right. And he's talking about Alex Karp, of course. All right. Because Alex Karp is pretty philosophical. He's pretty outspoken whenever he's interviewed, and you guys have seen the interviews, I'm sure. But he's pretty like lively, and whenever he speaks, you know, he does not hold back. He's pretty outspoken, in my opinion. All right, anyways, that is Alex Karp, CEO of Palantir Technologies, discussing his disconnect with his own engineers, according to a biographer Michael Steinberger's excellent book, The Philosopher and the Value. So I thought this was from Michael Burry. This is actually from the book, which I still have yet to read. For anyone interested in or affected by Palantir, Steinberger's book is a mandatory reading. Elsewhere we learn Peter Thiel, Palantir's chairman and true founder, waxes absolutely poetic talking about Karp. Okay, my riff on Alex is that he's working out some psychological issues where he has to do things in this really, really hard way versus the straightforward, easy way. All right. This is Michael Burry again. I have spent some time with Peter. I like him a lot. He's a great guy. I have not met Alex, but the book made me appreciate him. I mean, aren't we all working out psychological issues and doing things a really, really hard way? I'm not a praying mantis or green, but I get it. I am writing this after all. So what I'm about to go on about is not meant to be personal. My dyslexia is kicking in so bad. But yeah, Michael Burry, again, notable bear on Palantir. He has shorted the stock publicly. He took a lot of flack for trying to short the stock. And that's, was one of the, I think the catalyst, because he was shorting Palantir and NVIDIA at the same time. He ended up closing his fund. He basically ended up closing his fund, his office. So I think he could just do this whenever he wants, right? He can short whenever he wants. He could write articles. He doesn't have to answer to investors who are investing in his fund. Because I'm sure when he noted that, he was shorting Palantir and NVIDIA, I am sure a lot of his investors came up and blew up his phone, right? And just were emailing him, messaging him like crazy, like, what are you doing? Are you a clown? But we'll find out, if Michael Burry is right. He was right about, he's most famous for being right about the 2008-2009 great financial crisis. If you guys want to actually see that movie, or if you haven't seen the movie The Big Short, it's basically how real estate collapsed and how Michael Burry took this really high risk bet against mortgages, right? Against these banks that were issuing out these mortgages. So he took a massive short on them, and he came out right? Him and a couple others. So we have from Sean saying, Padre, I'm buying and holding Palantir for a long time. It's not a swing trade or a day trade. It's a long-term investment. I mean, I would agree with that sentiment as well. Again, I'm very bullish on Palantir long-term. I think it'll eventually join the $1 trillion club. Just like Walmart. So I think it'll get up there. It'll take a couple of years. It'll be some ebbs and flows, peaks and valleys, that kind of stuff. But, Palantir, I think, again, especially over these next 4 years with how much defense spending is going on and how much the Trump administration is spending, or fighting to increase, defense spending. Palantir is going to be one of those benefactors. Palantir is definitely going to be one of those benefactors. But outside of the government contracts, you still have Palantir as a software being adopted commercially. So, still very bullish on that. All right. So we already laughed about that. Let's see. Real quick, Highcroft, Hecla, and Dakota lead the way in oversold gold and silver stocks. All right. So I haven't covered these at all, but I just wanted to put it out there that even some of the mining companies are taking some massive beatings. You have Highcroft down almost 8%. GLD along with that, almost 3.5%. IAU down almost 3.5%. Silver down almost 12%. So you can take a look at some of the mining companies. They're pretty much getting beat up, just like the rest of the market. I could not find a catalyst for why the miners were actually selling off. Like I could not find any news relating to them other than that Russia memo that I spoke about earlier. Let me see if I can pull it up real fast. Yeah, so this is it right here. So Russia may seek dollar. Boo, tomato. Anyways, Yeah, so that was the only news I could find, was that you know, if Russia partners with the United States somehow, some way on critical minerals, mining operations, etc. That was the only thing I could find of note. I don't know why there's a massive sell off. It's probably profit taking, or just people rotating cash. That's the only thing I could think of. If anyone has any better ideas, please put it in the chat. But yeah, we had a request earlier to go over UAMI. All right, U.S. antimony, and BlackRock basically buying them up. So let's take a look. So we've talked about UAMI in the past. That's not it. Hold up. There it is. So we talked about UAMI in the past. You know, full disclosure, I personally do own a little bit of UAMI. It's more for me, I don't know, lottery ticket at this point. I do, you know, I do believe in kind of the fundamentals of, you know, why we need, obviously, antimony. Like I mentioned earlier, you know, you're going to have all these all this technology that needs that, especially, you know, missiles and bullets. But anyways, BlackRock added 2.1 million shares of UAMI. All right, Nuveen TIAA added 201,000. Swiss National Bank added 232,000 shares, and Bank of Montreal added 13.7K. All right, BlackRock is back to the #1 institutional holder. We can take a look here. All right, this is for UAMI. Okay, so this is who's buying it. You have the really big dogs coming into the space and just buying up the whole thing, right? Buying up as many shares as they possibly can. So is this bullish for UAMI? Let me know down in the chat if you're, you know, psyched about this. If you're a holder of UAMI, you know, I think again, the story is good, right? I think the story is good. The broader theme is good. Again, when we talked earlier about the debasement trade and investing in real assets, in my opinion, these miners are obviously part of that debasement trade. But you also have, and I've said it a couple of times on this channel, I know it sounds corny as hell or kind of like cringy, but we're in this government super cycle. Everything, all these other super cycles everyone keeps talking about, you know, Ethereum super cycle, you know, the debasement trade, AI data center super cycle, all this stuff. It's really the government driving all of these things, right? It's the government printing too much money. It's the government in control of interest rates. It's the government spending a ton of money on defense, right? At least over the next couple of years with this current administration. Everything is, you know, it's the government, you know, putting a huge focus on mining companies and rare earth, critical minerals, that type of stuff, getting away from, you know, Chinese supply chains, which has pretty much, you know, the entire world by the throat when it comes to that stuff. So again, in my opinion, it's just, you know, the government is driving a lot of this stuff. And that's why we cover, you know, again, some politics on this channel, at least, you know, from a high level governmental geopolitics level. So anyways, we are in a clown cycle. You know what? That's probably true too. You know, that's probably true too. All right, so guys, that is pretty much it for the stream. I've been yapping on for about an hour and almost 15 minutes. But that is the news cycle, right? That is everything wrapped up in a nice little bow. So I'm gonna open it up to the floor to any of you guys. If you guys want to chat about anything, or if you guys bring up a topic, maybe I can start venting. But yeah, that's pretty much everything in a nutshell for today. So we have Skeptic saying COMD. What's that? ETF? Let's take a look. Of course it's an ETF. No, it's not an ETF. Not an ETF. Damn, I can't believe I just talked nonstop for about an hour. Let's see. I'm just going back through the chat because I want to see what you guys are talking about. Let's see. Let's see. Sean owns Nebius. All right. Shout out to you, please. Or shout out to you. Let's see. People are sleeping on Hyundai. Well, they're going to be sleeping in a Hyundai soon with the way everything is going. Let's see what else we got. So speaking of AMAT, there's EMAT. I don't know EMAT. I think I've seen the ticker before. I think you've dropped it before. Let's see. Evolution Metals and Technology Corp. So is this another mining company? Let's see. Let's see what EMAT is. Dun, dun, dun. I should probably have something else cooler. There we go. That makes it look a little more cooler. Hold on. Let's do this. Let's see, EMAT. So EMAT Evolution Metals and Technology Corp engages in developing a global supply chain for critical minerals and materials. It focuses on automotive, renewable tech, and military and defense sector. The company is headquartered in West Palm Beach, Florida. The listed name for EMAT is Evolution Materials Tech Core Common Stock. It has 4 employees. All right. It has a market cap of 4.46 bill. Oh, all right. A lot of people has actually been buying this stock. Yeah, let's pull it up, guys. Let's pull it up. Yeah, so it looks like a lot of people have been buying this. Let's see what the hedge funds have been doing. Looks like the hedge funds have been selling it. So retail's buying it. Hedge funds are selling it. There you guys go. If you guys are interested, EMAT. EMAT is the ticker. EMAT is the ticker. So I see we had a question come up. Let me close this real quick. Comic book, always be asking the right questions, man. I really do like your questions, so I appreciate that. Would you please share some of your most impactful or hard-learned investing mistakes? The biggest one is listening to other people. That's it. Those have always lost me the most amount of money. What I mean is not doing your own due diligence, right? Just like we saw with Bitcoin and MSTR, X was just a cesspool of opinions, right? And it could create fear. It can create fear, right? A lot of people are listening to these people and then they sell out, but there's nothing fundamentally wrong, right? You invalidated your own thesis and why you invested in something, right? This is why you have to kind of have a belief in yourself and not borrow conviction, right? That's a phrase that British Hodl created that I really like. Do not borrow other people's conviction. You can use their conviction as maybe some support or as a data point in your own thesis, but you should do your own research on your own, stock picks, your own ETF picks. Because when the going gets tough and things start to, sell off and all this, all this bad shit happens in the stock market, people start, selling out because they're eating the fear and doom and gloom and they forget why they even bought something. Listening to other people was definitely the hardest mistake. I've made mistakes, right? I've made mistakes. I had to internalize it, reflect on a lot of the mistakes that I've made. And what really comes from it is just, I don't listen to people anymore. I really just don't listen to people anymore. Even sometimes like having, even like a community like this, on YouTube, sometimes you'll get comments, from past videos, they'll say you shouldn't be investing in this. This is stupid, blah, 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 blah. Right. And it makes you question yourself. I talked about this on Gary Gill's podcast, because YouTube is just YouTube, social media in general, not just YouTube, X, Instagram, Facebook, Twitter, whatever. It's all the same. It's just a cesspool of opinions. And you have to be real careful what you allow into your head because it could scare you out. There's people out there who say, the S&P 500 is a waste of money, right? Like, think about that for a second. Like, I remember seeing comments when we were hitting all-time highs. People were like, oh, this is easy. Like, you could beat the market. Beating the market is simple, right? If you're smart enough, right? And everyone thinks they're smart enough. But when you have days like this and you have markets that turn on you, then you're humbled pretty quickly. The old phrase, everyone's a genius in a bull market. That's, again, just me kind of internalizing from my own experience what's happened this past year, right? Like even my own portfolio, it was looking frothy, looking really good. I was making a ton of distributions, right? And then quickly the market humbled me really, really fast. It turned on me, turned on a lot of people. And here we are today. So now, well, not now, but I've always tried to remember my conviction in my own picks and my own thesis, right? Lean on my own thesis, my own, research and things like that. Because then we'll have what happened this past year, especially in the high yield space. Doesn't even matter if it's a high yield space, just in finance space, right? Where people are borrowing conviction, they're investing in things because this perceived genius, made a call, it was right once, and then everyone just ate it up and said, oh, this is, he's a genius. He knows what he's talking about. Then they follow their trades and then they get wrecked, right? This is nothing new either. This has happened plenty of times. My fondest memory, and I say fondest, loosely, unfortunately, was when Meet Kevin was talking about it, because again, that was my focus way back then, was like more traditional finance stuff. But Meet Kevin, what's interesting about that as a case study. So on one video, he was saying, you guys need to buy the dip, buy the dip, buy the dip, buy the dip, right? This is it. Like, we have to keep buying the dip. And that's where that song came from, Buy the Dip, right? Because he just kept pumping it up. And then overnight, he sold all of his positions and went straight to cash. And that was right before the market tanked and started tanking without recovery, right? So a lot of people like ate him up, was talking a lot of trash about him, basically video after video after video saying he sold out his audience. But again, that's it. Like, the audience was following him, right? When the audience can't blame anyone but themselves. They need to do their own damn research. They can't just lean on someone else and copy trade, right? Copy trading has lost me more money than anything. And I've copy traded a couple of times in the past. One of my biggest losses to date, well, actually not to date, that's a lie. One of my biggest losses was copy trading a crypto and a stock. One of the cryptos was called VeChain, and the other, it was VeChain, CivChain, and another one was called, or the other stock was GameStop, right? So you got the FOMO, everything was going up, and then of course it all sold off, and I just lost a ton of money. So those events kind of stay burned in your memory, and you don't forget those things. Like, I could tell you all the losses I've had. I could tell you all the I remember all of the losses I've had, because there's more lessons from those than the winners, right? There's more lessons from those than the winners. So, yes, anyways. But I appreciate the question, Comic. You always ask some really thoughtful questions. Bro, what do you, ComD? I swear I didn't see this one. Did you post it in the Discord? Is that why I don't see it? Hold on, I'm looking for this. I saw you post the BPRO ComD ETF and filings and updates. I don't know, Skeptic. I don't see it, man. I do not see it. ComD. I've got that stupid song out of my head. Yeah, if you guys are wondering what the song is, I'll show you right now. I've had it on this. I've had it on this channel a couple of times. All right, here we go. YouTube can't copyright strike me because I'm using YouTube stuff. So here we go.
Oh man, your boy Kevin just lost lots of money. Oh, but that's okay. I am with you, with you. Oh man, your boy Kevin just lost lots of money. Oh, but that's okay. I am with you. Here we go, come on, push it, buy the dip, buy the dip. Here we go, come on, push it, buy the dip, buy the dip. Here we go, come on, push it, buy the dip, buy the dip. Here we go, come on, push it. Oh my God, what's happening? First of all this whining about.
All right, you guys keep talking about this ComD. I got to find it now. I'm like, hold on. Is it ComD stock or ETF? Oh, okay. I see it now. All right. I am blind. Okay. Now I see it. So Global X. Okay. Man, Global X be on it, bro. They just be on it, launching stuff left and right. Okay. Now I got you. Okay, let's take a look at it. ComD is 1 day old. Speaking of penny stocks, let's see. How have penny stocks been treating you? I have not been doing any penny stocks since the last time we spoke, which was about a couple of weeks ago. I don't want to do it anymore. Don't want to touch penny stocks. I'm actually rotating some of my portfolio away from shit that I really don't have conviction in, that I've used borrowed conviction, or that I really don't fully understand. Probably bought in on FOMO too. I actually sold a lot of stuff for a profit before the big dip, especially in the miners. So hopefully I can keep that record green. Some of the miners I have, UAMI and what's the other one? UAMI and USAR, they're in the red. They're bleeding out. But again, I like the story behind both of those. So I'm going to keep holding those. All right. So anyways, commodity strategy ETF. Here's some of the reasons to own it. Potential benefits of commodities, active management, deep expertise. Let's see. Commodities sit at the center of a secular trend, fueling rising energy demand, blah, 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 blah. Yeah, that's pretty traditional for a lot of these global X funds. 1 day old, already 2.45 million. There we go. Okay, here's the story. It's an actively managed ETF that seeks to provide exposure to commodity assets. The fund gains indirect exposure to commodities through commodity future contracts and exchange traded products that invest in physical commodities, known as ETPs. For portfolio construction, portfolio managers typically utilize quantitative macro trend and momentum models, are developed by WealthSpot LLC, an affiliate of the advisor, to assist in the security screening and analysis, though the managers exercise ultimate investment discretion. All right, so this is going to be like an active approach to commodity selection. Here it is. So they got Brent crude oil, they got oil, natural gas, gold, soybean. Soybean, are they selling pork bellies too? They got copper, corn, live cattle. They got zinc. They got micro silver, wheat. Hey, look at that. The Aberdeen's in there. I didn't even know cotton was I really had no idea cotton was a commodity that could be traded. Soybean, more soybean, and then 1 to 3 month T-bills. Gasoline. Man, that's crazy. Here's some aluminum for you guys. Man, pork belly, let me tell you, that's all they got out here. That's all they got, pork belly. Commodities future momentum rotation, you're welcome. Well, thank you, Skeptic, for always providing a brand new ETF. When are you going to come out with your own YouTube channel? I really think you'd be great at it, man. I really do. Because you cover so many new ETFs dropping, like you would have unlimited, infinite amount of content. So, yep, commodities. Sith of Mordor just got home, and man, oh man, as my portfolio got more red than green. Oh, speaking of red and green, I forgot about the poll that we ran. Let's run that poll. Okay, I forgot all about that. The poll that all right. So the poll was, are we ending the week red or green? Okay, so this is the last 5 days. All right, and right now we have 62% of you saying that yes, the sky is falling, so is my portfolio. 26% of you say nope, we're going to end green, and 12% of you say I uninstalled my brokerage app, so I don't care. I'm going to go with the 12% on this one, man. I'm really about to uninstall my damn Robinhood app. I'm like, you know what? I can't lose the game if I don't look at the app. But yeah, that is it. I don't know. We're going to find out tomorrow, because again, tomorrow is the CPI numbers. Tomorrow is really going to I think they're going to come in favorable. But again, I still think the market is going to sell off. It doesn't matter at this point. Again, the big rotation, the mass migration away from software is still happening. So that is the poll. So appreciate everyone who did participate in that. Skeptic is keeping his share structure tight, not doing YouTube until he owns YouTube. Man, let me find out. Let me find out. Let me find out Skeptic is actually a multi-millionaire. All right, ladies and gentlemen, that'll do it for me. All right, that'll do it for this stream. I appreciate you guys, as always, joining for the stream and listening to me yap on about market news, crypto, equities, gold, silver, metals, blah, 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 blah. You guys know I appreciate you guys joining me. With that being said, you guys have a great rest of your evening, a great rest of your night, wherever you are in the world, or a great rest of your morning. All right, just like me, you know, the sun is shining. Might actually go out and enjoy my coffee. And with that being said, I will see you guys in the next episode. You guys take care.